It's tax planning time again, and I'm here to help you make the most of the 2026 end of financial year. As always, remember, this is general advice. Please contact us if anything seems like it might apply to your situation so that we can confirm if it's right for you. In this video, I'll take you through deductions, changes with the rules, and strategic tips to help you save tax, stay compliant, and plan with confidence. Let's take a look at the big ticket items from the 2026 federal budget. One of the most practical budget measures for small business is the instant asset write-off that was announced in last year's budget. The limit is currently $20,000 for the 2026 financial year. On budget night, the Treasurer announced that the instant asset write-off limit for 2027 will remain at $20,000. But if you want to obtain the tax saving now, you should secure the deduction this financial year. Keep in mind, if you want a deduction in this financial year, the asset must be paid for, installed and ready for use by 30th of June 2026. This applies to businesses with aggregated turnover under $10 million. It also includes used assets and business-related improvements to assets that include additions, so something like a fixed toolbox in a commercial vehicle would be included. However, things like capital works like buildings, non-business assets and the private use portion of assets are excluded. If your business spends more than the limit on an asset, you'll fall under the general deduction rules. If you're using the simplified depreciation pool, remember the rates: 15% depreciation claim in the first year, and then later 30% from the second year onwards. In the 2026 federal budget, the Treasurer announced a tax offset for workers of $250. This effectively provides workers with a $250 tax refund at tax time from the 2027-28 financial year. In addition, the government plans to introduce a standard deduction of $1,000 without the need to provide substantiation or have receipts. This measure has been on the agenda for quite some time. This is also expected to begin for the 2027-28 financial year. Next, we will look at the changes to capital gains tax, and this is a big change. Essentially, the 50% discount will be replaced with an inflation indexation and will apply to gains arising from the 1st of July 2027. Investors in new builds will be able to continue to choose the 50% CGT discount, but arrangements for investors with existing investment properties will not change as the measures are grandfathered. And changes were also announced to negative gearing. From the 1st of July 2027, negative gearing will only be available to new builds, but taxpayers with existing negatively geared investments at budget date can continue to claim negative gearing, as the measure is also grandfathered. Investors purchasing established homes from budget night can account for property losses and carry them forward to offset against property gains, but they cannot offset other income in the same year. And as expected, the tax of trusts has changed. The government will introduce a minimum tax rate of 30% on taxable income of discretionary trust from the 1st of July 2028. Rollover relief will be provided for 3 years from the 1st of July to allow for restructuring, and the loss carryback provisions will return from 2026-27. Eligible companies that make a loss in 1 year will be able to use the loss to claim a refund against tax paid in the prior 2 years. More support for startups was announced from 2028 to 29. Eligible startups in their first 2 years will be able to claim a refund for tax losses up to the value of the tax paid on wages, plus any fringe benefits tax paid. We also have budget changes to the tax incentives on electric cars. The limit for an eligible electric car for the 2026 financial year is $91,387. Going forward, electric cars under $75,000 will continue to receive the full FBT exemption if the arrangement commences before the 1st of April 2029. Electric cars over $75,000 will have a 25% FBT discount from the 1st of April 2027. That means that your company or trust can claim all of the costs of running the vehicle if it's under $75,000, even where the car is used 100% privately. It could be the employee's car or an associate like the employee's wife or husband. And remember, if you operate a company, you are likely an employee. And best of all, absolutely no fringe benefits tax bill. But note that you do need to calculate or ask your accountant to calculate the value of the fringe benefit, and that amount must be included in the employee's wage summary as a reportable fringe benefit. Additional changes apply to venture capital incentives and research and development incentives, but these will not affect most taxpayers. Now that's all for the budget summary. Let's look at some more tax time matters. One important development to prepare for is Payday Super. It begins on the 1st of July 2026, but businesses should get ready now. This change will require employers to pay employee super at the same time that you pay their wages, not quarterly. This change will have significant impact on your cash flow, so start preparing now. We have already released lots of information about Payday Super using the simple Zero Super Stream system. If you would like more information, please click on the link on screen now. The government also announced continued funding for ATO compliance activity, and the focus area this year includes short-term rental properties like Airbnb, especially where the property is used for both private and income-producing purposes. The ATO has introduced and recently updated some very tough rules that disadvantage taxpayers who privately use their Airbnb properties during peak seasons. Properties located in coastal areas are attracting the most attention. Please be sure to speak with your accountant about these changes. Some properties with significant private use at peak periods will no longer qualify for negative gearing deductions. Next, tax avoidance schemes. These are complicated setups that can land you in serious trouble, so if something sounds too good to be true, it probably is. Speak to us before you jump in. Retail and construction industries. Here the ATO is looking for taxpayers who emit sales income. Now let's move to some key tax planning strategies. These tried and tested strategies are great for most small businesses. Business travel. If your trip is under 6 days and business related, you don't need a travel diary, but it must pass the smell test and be genuinely for business purposes. If you're claiming flights and hotels, make sure there's a clear business reason. Prepaid expenses. Rent, insurance, and subscriptions can be prepaid up to 12 months in advance. Prepaying now brings the deduction into this financial year. Bad debts, write them off before the 30th of June. You'll need to show you've made reasonable attempts to recover the debt. Obsolete stock, write it off before the 30th of June, and note that you'll need to show that the stock has no resale value. Also, staff gifts under $300 that are infrequent and non-entertainment are tax deductible and qualify as FBT exempt. Wages to family members. If your spouse or children genuinely work in your business, pay them a fair market wage and keep proper records. Super contributions. Employer super must be received by the fund before the 30th of June to be deductible. This means in practice that you need to pay it before the 25th of June. For personal contributions, the cap is $30,000. But if your super balance is under $500,000, you might be able to use the carry forward contribution rule. Trust distribution minutes. These must be documented and signed well before the 30th of June. If you operate a trust, don't leave this to the last minute. Our clients, we are currently working on your trust distribution minutes, and you will receive these before the middle of June. Division 7 loans. Minimum repayments must be made before the 30th of June if you've borrowed from your company. Again, for our clients, we are currently working to determine the best strategy for anyone with Division 7 loans, and we will discuss our recommendations with you well before mid-June. Logbooks and odometer readings. If you're using the logbook method to claim your motor vehicle, please take your odometer reading on the 30th of June each year. Asset protection and structure review. This is a great time to check that your business structure is still right for your needs. And an important reminder about substantiation, both your receipt or invoice and also proof of payment. Also, don't forget Part 4A. There must always be a commercial reason behind your decisions, not just the tax benefits. Setting your wage as the business owner at the right level is a vital tax planning strategy. In the next video, I'll walk you through exactly how to set your wage as a business owner so you're paying yourself right. So stay to the end for the link. That's your quick guide to tax planning for 2026. If you have any questions, please go ahead and reach out to us. And don't forget to like and subscribe to stay up to date with more business tips for Australian business owners. Thanks for watching.